Hi there, welcome to Kneppyinvest and welcome to the stock of the day, Zip, ticker code ZIP or ZIP, depending on where you have grown up. This is a pretty obvious choice, just like yesterday, Plysay Studios, obvious choice. This is an obvious choice for stock of the day because currently, as I speak, share price is down about 24%. There we go, 24.46% on the back of their second quarter financial year 25 results. Sort of announcement I was waiting for in anticipation. We did see Sezzle release their quarterly update a few weeks ago, and it was okay. And I think the market expected some good things from Zip. And I think today is a really important case that even if the results look pretty good or okay on the surface, it's not about that. It's all about whether the results missed or beat expectations. So when I went through the results, I thought, these are not that bad. However, there was one red flag, which I'll talk about in a second. So after we have a look, or I have a look at the results and that red flag, we'll also have a look at what a few analysts did say, in fact, one. And this really points to the fact that the cash earnings that Zip did produce actually missed expectations. And that is one of the reasons why the share price is down 24.46%. Also have a look at the chart in this video because I am trading Zip and this could be a sell Zip sort of scenario. And I'll talk about that as well. In fact, my sell price is $2.50. And if it doesn't go any higher than this, I might be selling my trading position in Zip for a nice profit, but it could have been higher. Okay, so let's have a look at Zip's results. So I do go through these sort of announcements, not with a fine tooth comb. I do go through them fairly quickly, but I am looking at any sort of red flag. Now, cash EBITDA without the interest, up of $35.3 million, up 50.2%. So straight away, on the surface, that looks pretty good. TTV, total transaction volume, 3.4 billion, up 24.8%. On the surface, that looks pretty good. Revenue of 269.4 million, up 20.5%. Transactions 24.4 million, up 18.1%. Net bad debts approximately 1.5%, which is down from 1.7%. Cash transaction margins of 3.6%, up slightly. Active customers at quarter end of 6.3 million, up 1.5%. That's not the red flag. And they have increased their merchants on Zip's platforms. They also go through how they're performing in Australia and New Zealand and also United States. And I do think they have approached maturity in Australia and New Zealand. We're not seeing much growth in that geographic location, but they are experiencing some really good growth in USA. For instance, revenue in USA up 20.5% from the first quarter 2025, but up 41.6% from the previous corresponding period. In Australia and New Zealand, down 2.7%. So this is all about growth in United States. I won't go through all of these, but this company is growing quite nicely in that geographic region. So not growing much at all in Australia and New Zealand. Now, what I'm going to do is actually talk about the one red flag I did see. And to me, this is quite important because whenever I'm researching a company, there are three things I initially look at. Whether the company is growing their revenues, that's quite important to me. I want to see a company growing their revenue or cash receipts, depending what I'm looking at. The next thing I really look at is margins. What is happening to margins? Are they expanding or contracting or just going sideways? And whenever I see margins contracting, that can be a bad sign because even if a company is increasing revenue, with margin contraction, there's a possibility their profit, or if they're not profitable, other things are going backwards. And we don't want to see that. So in this case, the fourth bullet point down, revenue margin of 7.9% down from 8.2%. So that did trigger a little bit of red flag in my mind when I saw that. And then I just waited to see how the market was going to react. Funny enough, I did go to Hot Copper just to see what the mood there was. And the mood was quite high. In fact, it seemed like everyone, all the holders there, were giving each other high fives, that sort of thing, or virtual high fives anyway. So on the surface, they thought these results were pretty good. And they thought, oh, the shorters are going to hate this. The shorters have to sell now, that sort of thing. And then as we progressed towards opening, it was pretty obvious share price was going to drop. It was all about the manipulation of the market, that sort of thing. Of course, it's not really manipulation. What it is the results actually missed expectations. And we know that, well, just because I read it in Capital Brief. So this, in fact, funny enough, initially, here we go. Zip lifts second quarter earnings revenue. So this was before the market opened, and then the share price fell. So Capital Brief had to, put something else out. Zip shares plunge on disappointing earnings. So even Capital Brief wasn't quite sure. In fact, they might have thought that the share price would go up. So they're talking about how much the share price had fallen. In fact, they're talking about 247 here. So that was at 9:47 a.m. So this would have been my time. So just after the market opened, and the share price really hasn't moved since then. It's gone sort of sideways, maybe up and down a little bit, but really hasn't moved from near the open. But this is the RBC Capital Markets analysis, Jack Lynch. He does write about this company quite often in Capital Brief. Well, he's mentioned in Capital Brief quite often in regards to Zip. And he mentioned delivered a mixed second quarter result with the strong US performance. And I actually do agree with that. I think the US performance for Zip is quite impressive, overshadowed by softer revenue yields. So this is the margins I'm talking about in Australian New Zealand business, and cash earnings below expectations. So that's probably the most important thing. Cash earnings below expectations. That's the most important thing. That's the thing that can drive the share price of a company up a lot or down a lot if they beat or exceed expectations. It's not about the results on the surface. If they look good, it's about how they compare to expectations. And that's probably the most important thing when a company releases any sort of results. City Analysis, so we do have two set of analysis here, set a lower revenue margin. Remember, that was my red flag. Drove a 20% miss to the company's cash earnings. So if they actually did increase margins or they had margin expansion, definitely the market wouldn't have reacted like this. They also mentioned here, partly due to seasonality as well as higher costs. So in a nutshell, that's why the share price is down, because it seems like a little bit higher margins has pushed some of these earnings a little bit lower than expected. Is the market overreacting? That's probably the next thing you have to ask yourself. If you like this company for the long term, this could be an opportunity. Market, at times, completely overreacts. Is this true for Zip in this case? And I would say there is a possibility that the market is overreacting. We have seen this happen with Zip over the past few years. When a company does release results, on that day, the market tends to overreact a little bit. Now, in saying that, doesn't mean in this case is true. So this is the chart for Zip. Back in, was it August? Yeah, August, 5th of August, somewhere around there. The share price did drop a lot on results, and I'm pretty sure they dropped a lot somewhere else here. But the main thing here is when they did maybe miss expectations towards the end of last year, the chart was looking pretty good. The share price was in a beautiful uptrend, so there was a lot of enthusiasm about this company. We have seen a bit of a shift in enthusiasm, a bit of a shift in sentiment when it comes to Zip. Now, the share price has dropped to 250, and that is a really important level for me. In fact, that is my sell point, $2.50. I put that sell point probably about 3 or 4 months ago. And at this point in time, the share price is sort of oscillating right on $2.50. So if I see any more selling over the next few days, I might be taking a little bit of profit in this trade. Bought at $1.75 in August. The other thing is, share price got to a high of, would have been about $3.56 in early December. And what we really want to see is new highs. And we haven't seen the share price get back up to those levels. That's the first sign of a bit of weakness, that we aren't seeing any new higher highs. So that was the first sign. And then this bad day is a second sign that maybe the trend is starting to change, and maybe the sentiment is starting to shift from positive or even highly positive to maybe even neutral to possibly even negative. Okay, that's all I got around Zip. Pretty high volume too, by the way. That's all I've got about the stock of the day, Zip. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.